Today is the 5th of March and a position update for euro dollar and the dollar, and just something to really keep a close eye on, that this could be labelled potentially as a 1ABC2 to the downside in euro dollar. And if we look at what is labelled as a fifth wave advance of this C wave, we can see here 1, 2, 3, 4 and 5. Now of that final fifth wave of this 5-wave sequence, this fourth wave may not be complete, but it could be counted on the weekly chart in euro dollar as a 1, 2, 3, 4 and then 5, and then in the daily from the high we've had a 1ABC2, and this dashed line to the downside is just something I've placed there that may show this direction here. But from the C wave to the upside, this may be complete at this position here, it may not, it could retrace a lot deeper. This is essentially under Elliott wave principle a 1ABC2 expanded flat correction. And if we look at the dollar, you could see the reverse with the decline in euro dollar and the rally in the dollar with a 1ABC2. And as I mentioned, the depth of this C wave to the downside is yet to be seen if that is complete. And from a Fibonacci perspective, we are only interested in the impulse element from the grid, and you can see the A wave of this ABC so far has retraced 38.2. Now the C wave could be a lot deeper with 50, 61 or 76.4 as a retracement to the downside. But again, from the dollar perspective, that 5-wave decline, 1, 2, 3, 4 and 5, it's the question mark exactly the same as the euro. Is the fourth wave and then the fifth wave to the downside complete? So you could have 1, 2, 3, 4, 5 or ABC 4 and 5, but this, the longer this 1ABC2 and this piece of price data here continues, the less it's looking likely that it's part of an ABC. I think what's taken place is wave 3, ABC 4 and 5, and this is now 1ABC2, but that remains to be seen to the upside. This fourth wave correction, as I mentioned, could still be incomplete, but the purpose of this video coverage, keep a close eye on the dollar, keep a close eye on euro dollar with a potential 1ABC2. If this corrective structure here is labelled correctly with what could be as a 1, 2, 1, 2, 3, 4 and then 5, you would see the high taken out in the dollar index, which is 104.06, and you would see the low taken out in euro dollar, which is 1.03662. To put that in perspective, a couple of thousand pips away. So certainly worth keeping over the next coming days and weeks a very close eye to see if we do indeed, and this is on the weekly chart, see a little 1, 2, 3, 4 and 5 to the downside. But we'll continue to watch and update and see how the position in the dollar unfolds together with the euro, and with the long dollar very quickly would give us a missing piece of a jigsaw in Australian US dollar, with the final element of decline of a possible AB 1, 2, 3, 4 and 5. So that final rally, additional rally in the dollar would produce the bear market in Australian US dollar. So we'll continue to watch, but keep a close eye on the dollar and euro dollar over the coming days and weeks for that potential downside move. But as I mentioned, the depth of this C wave and if this fourth wave is complete yet remains to be seen, but it's certainly looking to becoming very interesting.